is a final round of discussions that we'll be having with investment experts of each sector. So this will give us a deep dive and understanding of the investment potential and what kind of opportunities do our experts see across climate, education, agriculture, and financial inclusion. So we have a very eminent list of speakers who will be sharing their expertise with us. And this includes Mr. Satya Bansal, founder, Blue Ashva Capital. He will be sharing his insights on the climate sector. Ms. Namita Dalmia, co-founder and partner at Enzia Ventures, which focuses on investments in the education sector. Ms. Rema Subramanian, co-founder and managing partner at Ankur Capital. She will share her insights on the agriculture sector. And we have Mr. Sanjay Jain, Chief Innovation Officer at CIIE.co, speaking on financial inclusion and its prospects. So the way we've structured this is that Mr. Ramraj Pai will be having short fireside chats with each of the sector experts. This will help us get like a very focused understanding of what's there in store. So not to keep you waiting anymore, Ramraj, request you to take this ahead.
Thank you. Thank you. So what we are going to do is, we are going to just do these chats one-on-one. We always followed the panel model, but, we just thought it'll be much more useful for us to have a focus one-on-one conversations. So possibly, Sagar, what we could do is we could just put the spotlight on me and Satya, and I'd first initially want to have a conversation with Satya, and then we can follow it on with conversations with Namita, Rema, Sanjay, and others. We have 15 minutes for each of the sectors. So we will start with Satya on climate, we go to Namita for education, then we go to Rema for agriculture, and then Sanjay on financial inclusion. What we want to do is spend maybe 10, 11 minutes between me and Satya, and I'd like for people, to ask us questions in the chat box. The idea is for people to ask questions, not for me to have a bunch of canned stuff that I tell Satya, or Satya telling us about his fund and so on and so forth. So that's the idea. So, I think, with that brief introduction, what I want to do is I have a few questions that I wanted to ask Satya, but maybe what I would request Satya is for the next maybe minute to minute and a half, why don't you just give us a broad commentary on the larger sort of, if I may say, innovation related opportunities in the climate related space. Why can't you just give us a brief commentary, and then I'll put a few questions to you, and then we will, in the last 4 to 5 minutes, open it up for the audience to, ask their specific questions. We've had a bunch of, areas that people have had questions. So I think what's going to be important is for us to get those questions from the audience. Please remember, guys, a lot of these people are spending their lives trying to look for these kind of pockets of opportunity. So I'm sure they'll be able to give you great insights. And we want to keep this interactive, not a one-on-one. So with that brief thing, maybe Satya, we could start with you. Let's talk broadly about the larger investment landscape, and then maybe I'll get into a few specific questions. Over to you here.
Yeah. Thanks, Ramraj. Really appreciate, and thanks IIC for getting me here. For those of you who don't know much about Blue Ashva Capital, we are essentially a VC fund based out of India and Singapore, and we have been actively investing in clean and climate tech sector for last 2.5 years. As we started building our own thesis, we realized that most of the clean and climate tech capital was concentrated on investing in largely in renewables, wind and solar, more than 95% of it. Hardly less than 5% actually gone into building enterprises outside of that. Of course, there is a significant amount of uphill task in front of all of us to build the enterprises and nurture them and build them to a scale that it can attract larger institutional capital as we build it. So there are a couple of challenges that we all, as an ecosystem player, are trying to address in our own way. One is to spot the enterprises and the founders early enough and see if we can really get them on board. And the bigger challenge that I see in the climate tech sector is also to identify those disruptive innovations which has happened at the lab scale in some university lab or in some research institutions, and can they be really turned into enterprise? And in climate tech space, the second challenge is a very, very significant challenge, because many of these innovations actually get built, get identified. There are some patents being filed, but then they don't really see the innovation turning into enterprise. So this lab to market gap is very significant in climate space, because the capital available to really turn that lab scale to a larger commercial enterprise is not that available in plenty till it becomes attractive for a VC player. So we have been working on both the space. Like in our case, we have a fund which actually invests in the enterprises like any other normal VC. Then we also have our own innovation centers, which we call them Blue Ashva Labs, and we try to help them in a way to turn some of these lab to enterprise journeys. So, and these both in a way help each other to get deeper into the deep tech innovation ecosystem, which also then helps getting more and more enterprises for the wider ecosystem.
Got it. So thanks, Satya, for that. I think that was, a great initial conversation. Now, broadly, Satya, from our perspective, when we segment the market, what we saw is that there are three broad heads. There is the whole space of energy transitioning to cleaner energies. The second is the whole space of decarbonization and, circular economy. And the third is really, what I would loosely call as environment tech / green economy startup. So, these are the three broad heads that we sort of, look at. Could you maybe talk us through what are some of the trends that you're seeing, say, in the energy transition space? And just to be clear, we're not looking at the large institutional green cos and, renew power kind of companies, but we are really looking at organizations which are innovative, areas like biofuels, green hydrogen, companies you have invested in, Green Jewels, something that Neve has invested in, companies like HygenCo. So give us a flavor of what is it that you're seeing in the energy transition space, and then we move on to decarbonization and green economy startups and so on. So just give us a flavor of that space.
Yeah, I think energy transition is a big area of climate tech space. Most of the work, as you also mentioned, has largely happened around wind and solar. But I see some of the bigger disruptive trends now happening. There is a big move towards biofuels. What we have seen so far in biofuel journey is only the first generation biofuels. What I mean by first generation biofuel is largely what we commonly associate with biodiesel, which has got calorific value roughly around 70% of the hydrocarbon diesel. So this is what we call is what I call them as a blended fuel that can be blended with the hydrocarbon diesel. In the process, you reduce the use of the hydrocarbon fuels. But now the second generation biofuel that is now attracting attention is drop-in fuel, which can exactly replace the hydrocarbon diesel, which is what you mentioned when you spoke about Green Jewels and some of the other companies. There's also work happening on second generation ethanol. And there's been significant amount of, I would say, innovation, or rather early stage investment happening in some of the, you can say, disruptive companies. It could be thorium-based reactors, nuclear side. This could be areas on the wave energy. There's a lot more happening. So basically, energy transition as such is now becoming a big area of opportunity for all of us. Right. But energy transition also has to be coupled with energy storage or energy banking. Yeah. And I believe this energy transition and energy banking in combination works beautifully well. And there is a lot of opportunity on this. But what we are focusing as an organization is we are looking for biofuel as a big opportunity, but largely the second generation biofuels. And we are very clear that we generally do not want to get involved with any biofuel coming out of the fuel or the feed value chain interruption. So we don't want to take the food away and then trying to create fuel out of it. That's our area of focus. But I believe energy transition in itself is going to be, it might take almost half of the, you can say, the capital that we require in time to come.
Got it. Now, moving on to decarbonization, we are seeing a bunch of companies in the waste management, circular economy space, We are also looking at, obviously the well-known names like, Fool.co is there. Then we also looking at some recycling companies, plastic recycling like Lucro Plastic Cycle and so on and so forth. What are some of the opportunities there? And, is that a space, which could also see a lot of traction, Satya?
So actually, there is a significant amount of overlap between energy transition and decarbonization. Of course, technically there is an overlap, but also the solutions are overlapping.
Right.
So when we talk about green hydrogen or green ammonia as a solution, now green ammonia replacing the fuel in the bunkering side, or it is also becoming a hydrogen carrier, or when we look at hydrogen as not only a fuel, but also an energy storage medium, that also provides a solution for decarbonization. See, the larger theme of decarbonization is twofold. One is CCU and second is circular economy. When I talk about CCU, we are essentially talking about carbon capture and utilization, and not CCS, not carbon capture and sequestration. So in our view, there is going to be a bigger play in CCU as compared to CCS. And more importantly, there is going to be significant amount of focus on circular economy. In the process, we are trying to decarbonize the world.
Right.
But the larger piece is going to happen around CCU, where you have a technology or you have a solution which can capture the CO2 from industrial emission, at least point of source emission. And then you can use that CO2 to make some, you can say, economic product. So if you have access to, let's say, green hydrogen, you can mix the green hydrogen with CO2 and convert into methanol, which turns into a green fuel. Or if you have green ammonia, you can use the very proven process and put it along with CO2 and convert into green fertilizers. So what I'm saying is that now carbon capturing and utilization, or CCU, is going to be the big theme in the decarbonization space. The smaller theme, but it's going to be equally big in terms of number of enterprises to support, is going to be around circular economy. What can we convert this waste to wealth story? And there are significant amount of players there, but each of these would be large in numbers, but impact would be, of course, much lesser on decarbonization as an outcome as compared to what we are going to deal with the CCU side. So we as a fund try to encourage the ecosystem around CCU or ecosystem around circular economy, whether it could be, and there are enough and more examples that you spoke about on waste to wealth story, and it's both for organic, inorganic, chemical and fermented based solutions. So there are different solutions operating across different wealth value chain as to how we can. But the bigger issue there is how can we segregate, how can we then turn into. So there's a significant amount of focus on recycling. But we as an investor, I mean, at least internally, we always say, is it a recycling solution? Is it an upcycling solution?
Right.
If it's upcycling, it of course attracts more attention from us.
Right. Got it. Great, Satya. I think we have 2-3 minutes before we open it up to the audience questions. So I just wanted you lastly to focus on the larger space of green economy startups. And in the green economy startups, maybe in the next 2-3 minutes, I'd like for you to speak on 2-3 things. One is obviously the elephant in the room, which is really mobility, the whole interest in the whole mobility space. And, in many ways, this whole space has become a sort of a proxy for mobility solutions. So briefly, you can talk about what are some of the interesting ideas that you are maybe seeing on the mobility side. And secondly, beyond mobility, what are some of the interesting solutions that you may be seeing, particularly in areas like, say, air pollution, energy efficiency, maybe, sort of alternative forms of protein. Any thoughts on these two? So just maybe quickly in the next 2 minutes, if you could cover these two, I think, we'll then open it up. There's a bunch of questions that we are seeing in the audience.
Thanks, Ramraj. So currently, when we look at this space, a large amount of, I would say, attention is already stolen by, you can say, e-mobility startup in different shapes and sizes. I think that's right, but I believe that we need to build a significant amount of energy transition and decarbonization play in parallel to it. Otherwise, this e-mobility will become just another form of a challenge where you are producing from thermal and then transferring it to e-mobility. So of course, e-mobility is going to attract a large amount of capital, and that's a new hour. But within e-mobility, what we have realized that there is a larger play into the value chain rather than just becoming an OEM.
Got it.
Whether you have a technology for lithium-ion, sodium-ion, hybrid, supercapacitor, that's more important than simply becoming one more OEM or investing in one more OEM and expecting your OEM to be different unless you have a significant amount of value chain play behind that. Similar way, when you look at the motor and control or the entire transmission side of it, there is going to be powertrain side of it, there is a significant play. So we we have rather distilled our thesis based around that we want to rather be the Intel rather than become an IBM. And that's mainly because of value chain play that we are focused. And I'm not saying this is the only strategy. There are different players having their strategy of investment in different ways. Outside of the e-mobility, there is a significant amount of, I would say, we have identified two different trends, and I can't generally speak about so many other themes that we have been working on because time is limited. So I'll focus only on two themes that we have looked at here. One is that we realize that air pollution is going to become a big challenge worldwide, and it's already there. We living in Delhi and Mumbai and many other urban areas are very familiar with this. How can we reduce air pollution at scale? And that's one of the areas that we have been looking at in a big way. And we invested in a company called Devikat, and we've been seeing that. And there are many other solutions we have been looking at similar space. How can we reduce air pollution and make our environment much more cleaner and healthier? The second big space that we have been looking at, and this is all coming either from energy efficiency point of view or distributed energy use point of view.
Yeah.
So one of the use case that we have worked upon, and that could be significant play in time to come, is that how do we reduce the refrigerated when it comes to logistics? Anything that you need to maintain at specific temperature, whether it's a food, pharmaceuticals, or any kind of which requires a specific temperature to be maintained. Right now, we are using all refrigerated vans, and that's consuming a significant amount of course, energy and mostly diesel in carrying from one place to another. Can we get into a replacement of that? So we have again invested in some PCM solution company called 1090, and our idea is to see how we can reduce the use of refrigerated van when it comes to food storage or for that matter, pharma mobility. So there are a lot of adjacencies on this third area. This space is very wide. You opened a very different dimension. There are about 15 sub themes that we have been working. I really don't want to take time of the audience here. Maybe I would urge people to ask the questions so that we can just for the time.
Yeah, I think quickly 2-3 questions, Satya, before we close the conversation. One is, I think people wanted to get a broad sense that a lot of the opportunities here seem to be focused around the mitigation agenda. Are there opportunities you are seeing on the adaptation side? Is, I think, one question. And, is there anything specific? Because obviously adaptation, comes with a very different set of challenges, compared to mitigation. So, maybe you don't want to just speak a bit about something there.
To be very honest, this has got a very long answer, but I really don't want to see. There is a significant amount of overplay between mitigation and adaptation.
Right.
Okay. And different people try to classify it as per their convenience. But yes, we have to work on both mitigation and adaptation together.
Right.
And when it comes to adaptation, one big piece that we need to keep in mind is that we need to get more and more stakeholders involved in adopting some of these technologies, which are otherwise not getting utilized at scale. See, identifying a solution is one thing, but implementing the solution and trying to get that more widespread. I believe one of the previous speaker was talking about bringing this technology for diesel genset, getting reducing the air pollution around that. Technology there now that we have to just go and build it at scale so that this gets adaptation faster. But there is a significant amount of overlap between the two.
Got it. Satya, just one more question, which I thought was an interesting question, is that obviously a lot of these solutions are not just simple applied engineering solutions. There is a lot of intellectual capital and potentially deep tech type of solutions, because, you're not trying to solve very easy problems. So, you may have to come up with very unique, very original solutions. What are some of the challenges? Because, and these could be longer gestation, the path to scalability, as you said, may not be very, very evident. The path to a viable product can have its own set of challenges. many of the founders could be from very traditional academic background. They may not come from a very, sort of regular business background. What are the kind of challenges you see in some of these kind of companies? And, it could be then other sectors, but because here you're trying to come up with many unique solutions, are there any specific unique set of challenges that you face, and how do you typically handle some of these things?
Very, very important question, and we have been looking at these challenges directly ourselves for last 3 years. One of the biggest challenge that you have when you invest in deep tech, this kind of disruptive innovation, is to believe in what the innovator is saying. And more often than not, you can't get any external validation done.
Right.
Because if you go and talk about that, hey, there's something like this available, people will have either a sense of disbelief or you will not be able to share the proprietary data that this can be done. So you need to build a very strong internal, you can say, conviction that, hey, what he's saying, can I believe in it or not? I mean, of course, you need to do a deep dive in. So what we have done, at least in our case, that normally in a VC fund, you will have a lot of these team of analysts and senior analysts and people who do the commercial part of it, and they will try to dissect the whole product market fit and then the growth metrics and everything. We realized that we also need a significant amount of technical talent pool, and they should be able to think out of the box like the way the founder is thinking.
Yeah.
So today I can talk about our own example. We have close to about 10 PhDs. Okay, right. They are scientists in their own way, and they have been working full time as part of like our innovation center. Right. And they basically help us to basically dissect in a way the solution, whether this is scientifically possible, is it technically feasible, and then we overlay the commercial viability on it. So the crux that we need to find out as part of this is it technically feasible and commercially viable? And both has to fit into your analysis early enough. And if you can be on the same side as what the innovator is, then you can turn into enterprises. Of course, there are significant amount of product market fit and growth risk associated with it, but that we have to look at it like any other startup for that matter. But getting that innovation validated internally with internal conviction is the most important aspect.
Got it. Thanks, Satya. I think we're going to conclude our conversation with you, but really appreciate you coming down and spending the time with us. We're going to quickly move on. I recognize that this has taken us 4 or 5 minutes more than I would have liked. So I'm going to move on quickly to Namita from Enzia. And Namita, I'm going to try and be a bit more disciplined than I was in the last one. So Namita has been in the education sector for many years. I got to know her first when she was in Omidyar, looking at several of the companies there, and now she's co-founder at Enzia. So Namita is going to talk briefly about the education sector. What I'd suggest is, Namita, we can kind of just quickly, you can just give a quick overview of what you're seeing in this space. And then I have a bunch of questions that I may kind of put up, which we may then try and answer. So maybe, a quick 2-3 minutes from you in terms of what you're seeing, and then we can get into some of the, kind of trends that we are seeing. Over to you.
Thank you. And I'll also try to be quick here. First of all, it was great to see the retrospect report. And as I was sharing with you offline, Ramraj, we also just did a quick, the retrospect study of actually all the 3 sectors that we operate in: education, health, and when climate is new. So, but really, when we looked at education, we took the last 10 years view, because that's when the edtech has really been invested in. And I just want to kind of bring this to everyone's attention, because, somewhere this kind of gets missed because of, the entire conversation around pandemic. But if you really look at 2013 and 17, cumulative edtech funding was $850 million, right? But it was year 2018 when you saw $850 million funding happening in that one single year. And 2019 was also $600 million. Right. So this, to me, the reason I bring this up is because we really started seeing an inflection point in education or edtech investments space in 2018 itself. And of course, it was a culmination of many things that we know: the affordable internet, the ability to democratize education, and also possibility to deliver high quality education at low cost and at scale, right? Of course, then pandemic came and there was a forced lockdown, and colleges and schools were shut, and there was no other choice. But besides the pandemic-induced growth, there were a couple of other factors, right? The China edtech closing also diverted the money to India EdTech, as well as some other sectors which were hot earlier were kind of closed down, right?
Yeah.
So what happened? In the last couple of years, we know that the category leaders in this space lapped up a lot of money. This include, K-12 or test prep companies to even the upskilling companies. We also saw category followers, right, with better PMF and distribution attracting capital. And this is an example here, right? So it doesn't mean, and to me, this is an important point to say, it's not, education is not a winner takes it all market, right? There are so many problems to be solved. And if you have a better PMF, better product pricing strategy, and if you have a better distribution, you can continue to build, a company and be big while there are other big players already that exist in the market.
Right.
We also saw that the slow to attract categories, got attention, right? And I put school education, EdTech for schools in that space. Since the barriers were significantly removed. There was also new COVID categories that got created. And, I call them new COVID categories because that's where we saw the biggest impact, right? As students move back to the physical education or the physical learning, the extracurricular space, for example, got seriously hampered, right? So those COVID categories, we don't see much action, and except for one or two companies which are doing well.
Yeah.
We also saw education finance following up, right? Because why? Because, as education is growing, the cost of education is growing, the financing barrier needs to be removed. And we see that. Also, the aspiration of people didn't reduce, right? So we also see a lot more movement in the foreign education space. And my commentary is on the overall education, right? But when I take the impact investing lens, also we see the impact companies also, doing better and attracting capital. Of course, a lot of learnings from that, but let me take a pause and wait for your question.
No, I think that's a good kind of overall summary. I just thought maybe I'll kind of pick your brains, Namita, on the late stage. We are seeing slightly more, if I may say, just look at the kind of companies which have continued to be successful in raising late stage money, even in 2022, when, actually we saw a little bit of consolidation post pandemic, is really companies which are a little bit more sort of, if I may say, towards areas like test prep, could be areas like livelihoods, which are a little bit more oriented towards sort of employment, livelihoods, directly or indirectly. Sort of, how do you kind of see this play of the applicability of education in more practical situations? One, which is from a customer level. And the second is, how do you really see this sort of, if I may say, the balance between scale and profitability? So maybe, these are two different dimensions of the same issue, which is what market are we trying to address? And second is, how are we going to balance scale and profitability? Maybe this is really the major question in this particular space. And maybe you could, briefly talk about that.
So when you really think about profitability, right? So somewhere, I think that the capital infusion itself became a problem in this space, right? What happened when we deployed $9.8 billion in the last 3 years in this sector, right? And when you deploy that kind of a capital, that the focus goes on land grabbing without efficiency. So a lot of unit economics broke down, right? So and now all those large players are back to the drawing board saying, how do I fix my unit economics, my profitability? I cannot just grow by throwing cash onto the problem. And also I need to find new levers of growth. I also see the online only medium being questioned, right? People are really thinking digital and physical. I don't think physical is the way to go, because then what is really your mode? What is the need for technology? But what is that phygital or hybrid is an important question for people to answer, right? So this point I'm saying, specifically applicable to maybe your K-12 or early test prep segments, right? Because you asked the question that, is online education not valid for that segment, right? Because we're going to focus on test prep and higher. I do think EdTech has a role to play, but we just need to be more capital efficient. We need to do things meaningfully. We need to solve for the right hybrid model in that segment.
Right.
When it comes to test prep and upskilling, of course, the ability to link education to an outcome easier or more direct linkage helps the company to build a brand which is
Brand.
based on outcomes, and which I think has been the most missing part in the edtech landscape. So what we are seeing is that the higher education or upskilling companies, because they also know that there is no LTV play really, right? They are focused on contribution margin positive from day one, right? So the companies have been able to demonstrate 20-30% contribution margin, and they continue to grow by going deep into their own verticals.
Right.
The good news is, again, higher education, is a segment, or when I say higher education, upskilling, livelihoods, is a segment where you can build good businesses by just going vertical. And vertical is in two ways, right? Vertical is like the stream that you are giving education in, but also the target segment that you are approaching. So there's plenty of room, plenty of opportunity for companies to build companies, for entrepreneurs to build companies in. Really, the key is to demonstrate outcomes, right? And that's where the magic happens. And that's where you kind of sieve the good entrepreneurs from the bad entrepreneurs, or the good companies from the bad companies, right?
Anything interesting you're seeing, Namita, in the very new early stage? Are we seeing any new models coming? We've spoken a bit about the late stage, and we spoke about, the closer you are to an outcome and the closer you can to deliver a good outcome, obviously the company will be more successful. Anything interesting you're seeing in very new companies, and any interesting models that you could maybe speak about?
Very honestly, the kind of enthusiasm we saw, not just in the investor community, but also in the entrepreneur community about education has gone down, right? So you don't see many new companies being formed, but you see, companies being formed by very good entrepreneurs in select areas, right? So, these select areas include like the higher education, linkage to outcomes. We also see education finance as a space that will continue to grow. And I do think there will be more and more opportunities, just like in any other financial inclusion space. Foreign education is taking shape. What I would like to say is that there are still PMFs and the right product business models that need to be created, in early learning. Right? We don't have a company there, while we know parents are spending money on that. Vocational skills, right? It's been taken up by the quote unquote impact, founders or government monies, but there are vocational skills that could be taken up. Gig platform /
skill development, Namita. Skill development. Just as an outside-in person, when I look at skill development, not so much English skills, test prep skills, not those broader skills, but specific technical skills. Kind of for you to be able to do different kinds of jobs. Which is partly what people like NSDC have been doing. That's not a space that, we've seen some action from time to time, but we really haven't seen any great successful names. Do you have any views on that?
Yeah. So I think the last decade was also a lot of structural problems. I think it was good intention of the government to do subsidies, but also that created a lot of structural issues, right? But if you look at a company like Virohan, which is focused on training people in allied healthcare workforce, that is building with reasonable scale. And, I think the math ultimately needs to work out. The contribution margin math needs to work out. If the ARPUs are too low, then it is very hard to deliver high quality training. And also vocational training, you're catering to a segment. The lower you go into the segment, the harder it is to deliver high quality outcomes, right? I think if you are building with a very low ARPU model, then it is not interesting from an investing perspective. But if you are promising candidates the job of even 15,000 rupees per month after completion, and are able to reduce the financing barriers early on, you can build interesting models with good 30, 40, 50,000 kind of ARPU also. So those are spaces.
Models like your Masai and all that, which are somewhere, not in the zone what you're talking about, but interesting kind of space where they're trying to build this whole space for coding knowledge and so on and so forth. Do you see that that's because that can be a pretty substantial interest area just from a student perspective? Because, eventually what does everyone want?
Oh, absolutely. And I disclaimer, I invested in Masai just before I left Umedyar. So I think there are a couple of things that Masai does very well, right? It is targeting a segment that no one else is touching, and it is able to work really hard with those students to deliver outcomes, right? That's what I was, that you have to really work hard. So the magic ultimately lies in the education.
Right.
I think the other thing is that you're really breaking the financing barrier by introducing the ISA, right? So ISA is not just about, trust building, but you're also reducing the financing barrier through that. And that is also very important, right? Like, 20-30% of students are not enrolling into higher education because of, the lack of financing, and the financing is also not easy to access. So I think this combination works very beautifully for Masai School, and there's a lot of opportunity. Not everyone needs to do an ISA, but really need to think about these two problems: reducing the financing barrier as well as delivering really high quality outcome and showing it at scale. So similar things can be done outside coding for targeting the other vocational skills.
Got it. Okay, so quickly, a couple of questions. So Parikshit has an interesting question, Namita, which will be close to your heart. He asks, what are your thoughts on first generation women-led startups in EdTech?
So we don't, as a fund, we have made investments in 7 companies, and we have 4 companies, which are led by women, right? Or co-led by women. And, frankly, we didn't start by saying we want to invest in women entrepreneurs, even though we are a all women GP team. That's not how we see necessarily how our investing strategy. And the reason we've been able to do that probably is because we just bring the no bias lens, to investing, and irrespective of the gender of people. And our women all our entrepreneurs are doing fantastically well. So I don't necessarily see women versus men as, or the first generation or second generation as an issue. I think it's really about finding the right problem, finding the right founder market fit, and investing in them. So we'll continue to use our unbiased lens to doing so.
Great. Thanks, Namita. I think that's the, if anyone else has a question, we have half a minute. If anyone has a question for Namita, happy to take that up. Otherwise, we are going to call it a close and get on to Rema on the agri side.
Thank you for having me, Ramraj.
Thank you very much, Namita. And, it's a pleasure for us to, hear your perspectives. We'll now move to Rema from Ankur. Thank you very much, Rema, for joining us. And, it's great for you to be here with us today talking about agriculture. I'm sure this is a sector which is of great interest, for all. So maybe what we will do, Rema, is just like always, maybe a quick 2-3 minute broad perspectives on how you see the agriculture sector, and then I'll ask you a set of questions, and then we'll get into audience questions. I'd request if audience can also ask some questions. I'm sure they will have a lot of questions related to agriculture. Over to you, Rema.
Yep. So thanks for having me here. So the look back, like whether it was climate or EdTech, like what Namita said, agri-tech was pretty much non-existent. Forget about decade back, even 8 years back, right? It was not something that was seen as an investable opportunity or from an impact perspective. So this is definitely something that has been an emerging sector, and to see hundreds of millions of dollars being invested year on year, like $500-600 million every year, has been a significant shift in how this has evolved over the last 7-8 years. And if you see that how this evolved, there's been broadly has been across 2 sectors which emerged. One was around the whole supply chain bit, and the other was around the on the consumer side, brands getting developed over the last few years, and where most of the money went in as well. And in the supply chain side, a lot of it is very similar to what Namita said. So, that these attracted attention of investors, not just impact investors, but even general regular investors. There's a lot of money that got pumped in as well. What we are now seeing is the fact is over the last, the last 12 to 24 months, we have seen some trends emerge, I would say. Right? One is the fact that what has got added to all this mix has been the fact that the whole space of at the productivity stage, which is around the whole biotech space, the automation, which is whether it's drone technology or use of technology, the tractors and other implements, has got the adoption of that has increased significantly, and there has been a trend towards investing in those spaces. Still a small number, but it's still an opportunity and huge opportunity. The other is that in the supply chain space itself, there's been some consolidation, as well as there has been a more, I would say, is a fact, more verticalization from horizontal models that has evolved, is what has happened. And we can get more deeper into it as we speak. And the third part, the consumer part of it, I would say, has been, it's been a mixed bag. Some part of it has worked, some part of it has not worked. That's how I have seen it emerge this way we see that going forward. Right? Very interesting times in terms of the fact that it's one of the huge, it's a huge market globally. It's from an SDR perspective, I don't think that, from an impact perspective, you can get better results than from agri and food, right? I mean, it's something that's really at the core of what we do, and the also from the fact that with food security being an issue for every country.
Right.
One of the things that I think that this could really play a role with in this sector has been the fact that India could become the economy world, right? And so we could really be not just serving India, but also could be towards global learning. So I think we're sitting in an interesting time, and it opens up a lot of opportunities.
Sure. So quickly, the first question, Rema, that I had was really around, as you rightly said, this sector has seen quite a bit of investment interest over the last 2 to 3 years. So there's been a decent amount of funding which has come in. Large ticket funding has happened. How are you seeing business models, particularly in the growth stage, in the later stages? As you rightly said, there has been some degree of, if I may say, consolidation or rethinking about the business models. How do you see this whole, sort of space of scale versus profitability? Question that I was asking, Namita also, particularly in some of the larger companies which have obviously grown very fast, have made significant investments. Do you see strong business models which are having a visibility around being able to balance out both of the scale and profitability?
Absolutely. I think that the scale and profitability have become central to the whole discussion. And one of the biggest shifts has been that the valuation criteria itself is shifted to how the IPO markets would value it. So it's become more of an IPO multiple of revenues rather than as a growth multiple. So the future growth multiples that used to be seen by the VC industry. Right? So I think that has been the biggest shift. So when you look at it from an IPO multiple perspective, then the profitability is one of the key drivers as well. Right? So that's been a biggest shift, which is VC future growth multiple to IPO multiple. What kind has been one big shift?
Got it.
The other shift has been towards the fact that there's been a lot more verticalization. Because that's one way that you can add value to specific verticals and be able to build margins out there, right? Because this is one space that has had that. The third thing is the fact that I would say that there's been a lot of shift towards omni-channel as well, right? And so that's been a key driver as one thing.
Yeah.
The last one is the fact that there has been working capital, which used to be, which is one of the key drivers of supply chain businesses. The fact that equity capital cannot be the solution for it, and the banking sector has to be involved, has been realized, and you see a lot more of the banking sector as well being involved as well. These are broadly what I would say as emerging trends in the space. There is still a lot